All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I want to jump on, take a look at the ISM number here with you, and you can see what's been happening here to manufacturing data in the U.S. It continues to contract. It continues to dip on the trend, but it's still not, or the trend continues to weaken, but it's still not in the contraction phase, still above 50. Here today we have the ISM data, and I'll kind of show you what it looks like here because it's a pretty bad, a pretty bad number. In fact, it's one that typical markets, we'd probably see the market down 20 to 25 points right now. Are we seeing that? No, right? I mean, we're still in this absolute Teflon environment. Market just assumes, oh, okay, you know what? It's bad, but it's going to get really good going forward. So, anyway, that's that's kind of what the trend here looks like. If we come and we look at the actual number, it's worse than the trend. Again, we're not talking about contraction. Right? We're not talking about contraction, but we are talking about a big change. In March, we saw the PMI, the ISM number bump back up a little bit, and it kind of took some of the fears away. But we are seeing that erased this month and in a big way. The actual number last month was 55.3. This month is 52.8. It's a sizable contraction, but okay, fine. Not all moves are the same. But take a look at where the contraction is happening. It's happening in new orders. That's a huge drop in new orders, 5.7%. Production, 3.5% drop. Employment, 5% drop. Supplier deliveries, okay. Inventories rose. That's the part you don't want to rise, right? You don't want to see growing inventories. Growing inventories are a sign that new orders are going to lighten up. Customer inventory is pretty much unchanged. Prices. This is one of the biggest drops that we've seen, and it's at 50. Possibly going into some contraction. And this is a change. Number of trend months, 1. You can see a lot of these, number of trend months. It's been a long time since we've seen them change, but here 1. This is changing. Backlog of orders grew. Okay, so that could account for a little bit of the production drop. New export orders contracted, imports contracted, and both are in a contraction area here. Now, how's the market going to look at that? Imports and exports. When China deal's made, that'll come back, and that'll be fine. This is a pretty ugly number. It's one that we haven't seen in a long time, to this degree. And one that I'll show you the market reaction here to the data. The initial reaction, makes a little sense. But here we go. Zooming in on the 1-minute chart. This is the candle for the ISM data, right? We saw about a 4-point drop and then recovered very quickly, and the market just pretty much unchanged from that point now. Right? So market doesn't care, right? Market just not reacting, not caring here on that number. And not that that's a big surprise, right? In fact, that shouldn't be a surprise given the environment. But that is an additional risk factor, and I think a very big risk factor as we go forward. But nobody wants to be caught selling ahead of the Fed here today, as we've seen, the Fed be, very pro markets. I've talked about FedEx, and I've mentioned I'm in FedEx personally, and I got in here on UPS's earnings on this gap down. I bought some monthlies, I bought some weeklies on the put side. On Friday, my weeklies expired, so I took them off. Very nice. Held my monthlies. We've seen FedEx bounce back a little the last 2 days, trading back lower here today. Bounce coming down off that 7-day moving average. very nice kind of entry point, re-entry point using today's high or today's open as a stopping point if FedEx is able to close right here. So very nice setup there if you're looking to play in another leg down on FedEx. UPS, not quite the same degree, but they're coming off of earnings, so you're not going to have as fluid or as smooth of price action there with it. I continue to look at gold and go, okay, you know what? Do I get a chance to be a buyer here? Just haven't had it yet. I think we're looking at a base out process right here, but we haven't seen that any sign of that next up leg starting here. We're probably that's probably something that's another 3, 4, 5 days away. But we see the actual commodity gold having bounced up, right? And we see some of the gold miners trading down near their lows. That's never something you want to see. You want to see gold miners outperforming gold if you're going to buy gold miners. So we don't have that here, just yet in the markets. Apple, zooming on up here this morning, pretty much with its gap. You can see coming back to the September-October levels. It's not a great risk reward right here, right? This isn't something where you look at and go, wow, okay, I could buy it right here and use this as a stopping point. But when we see Apple gap up on earnings, right, it tends to follow through. It just tends to follow through. It doesn't, it's just one of those where, path of least resistance for Apple is absolutely higher when you look at it historically on earnings gaps. And so can you chase into it? Sure. You just have to find an arbitrary stop point. But you can chase in. You're probably going to be right, at least up here to 220, somewhere in that area here with Apple. Then Yum Brands gap down here on earnings. It's been a monster run here for the company. We have some negative divergence in some of the indicators, some of the oscillators here as well when it comes to Yum Brands. My favorite in the group is still Chipotle Mexican Grill, and I know it didn't have a favorable earnings reaction, but it was a pretty good earnings report, and one that bouncing back above that 7 here after shaking off the earnings reaction. Could definitely see some further upside here. One of my favorite in that group, that kind of restaurant group. We saw McDonald's earnings. Again, this story is about the same. It just keeps on going up. Why? McDonald's is the biggest buyer of their stock. They continue to acquire debt in order to go out and buy their stock, and that's a very slippery slope. But it is a slope that continues to increase. We continue to see further increase here with it, and one of those that kind of keeps it immune as far as when there's pullbacks, it continues to get bought up. In fact, you look at McDonald's, it didn't pull back the way the market did back here in December, November and December. It has been very very resilient there with that buyback in play. Last but not least here, Alcoa, again this morning, early gain, giving that up, just dribbling along the bottom here. This is just typical chart setup for further decline here in the stock, and we have several of these out there in the market. These types of charts, the National Oil Well Varcos of the world, the Alcoas of the world. I mentioned yesterday that I'd be interested in shorting Arconic if it gapped down today. Obviously, it didn't gap down. Not interested anymore. That candle yesterday, this is a candle that we often will see, and if there's a gap down, the stock falls, and it falls quite a bit. But if there's a gap up, it takes that completely away, and is something where this candle no longer matters, right? This candle is now irrelevant. It's now a new story, new event. So nothing there that I'm looking to get involved with here with Arconic as it sits. You can see things like FCX continuing to roll down. This was a pretty bad earnings report. We talked about it. We talked about the sector the day before the earnings and how the sector was changing. The BHPs of the world, the Rios of the world, they had shown some real topping elements to them. I still think we'll be talking about a lower high coming in eventually. They'll get their bounce, and kind of a lower high will come in, but just price action not very not very great with those. Here's Caterpillar. Caterpillar, obviously dropped on their earnings, has had that bounce back to that 7-day moving average, rolling back off of that to the downside, here today. So, we continue to see this very mixed bag of kind of bullish stocks and bearish stocks out there, and, overall market that remains, or where the indexes remain, coated heavily with Teflon. Thanks for hopping on. Have yourselves a great one. We'll talk to you in an hour. Take care.